Okay team, so we are done with last week, and even though we started off a little bit rough, if I pull up my 7-day chart here, you can see we did start off a little bit rough, had a few losing days. We corrected our mistakes really quickly and started performing much better. Now my main mistake that I was making in the market this past few weeks really was that I was just jumping in the futures market a little bit too early after the open. You know, a lot of people romanticize the opening bell and it's just this really exciting part of trading, but the opening bell is incredibly spontaneous and random, and so it's just not easy to trade, and if you try to pick a direction in that first few minutes, a lot of the time you're going to get chopped out. That was one of the things that was happening to me, you know, not this past week, but the week before that. And so this is something I corrected this previous week. And you can see we made about, you know, $950 in gross profit over the last 7 days of trading. And so a little bit over a week, about $1,000, not too bad. Still, at the same time though, we definitely need to scale up our size. So far, in about the month that we've spent in this combine, you know, we're making about $2,000, a little bit under that. And so we definitely need to scale up in size, but the strategies that we have been using in the Topstep Combine have been very effective, and that specifically is what we're going to talk about in today's video. You know, if you don't know, the Topstep Combine is a funded account program in futures, and even though my Thinkorswim account is about 30K plus, I still wanted to test myself and take these challenges, as well as Topstep is a sponsor of mine as well. And you can see my profit graph pulled directly from the platform over the last month in October was pretty solid. If we scale up our size, we should be able to get funded pretty quickly, at least I hope so. And so with all that said and out the way, let's take a look at the strategies I use to hit this profit graph in futures. Okay, so one of the things I've been doing really well this week is just having patience and looking for a range to identify after the opening bell. The opening bell is very spontaneous and random, and so you will get chopped out if you try too hard to pick a direction in that first 5 to 15 minutes after the open. And so what I like to do, as you can see here, is I identify a range after the opening bell. I like using the wicks as highs and lows because that lets me know where the full range is, and then I wait for that range to break, preferably on the downside. You know, once we can identify that range and we're trending maybe above the volume weighted average price, as you can see here, I can look for that range, wait for it to break down underneath that range, and then look for resistance to hold. Once that happens, I love shorting into the small bounces that we get from that, and then just rinsing and repeating that until the trend breaks. You can see the range finally breaking right here, and this is letting me know that it might be time to attack the downward direction, is because we're continuously testing the bottom of the range, letting me know we might break it. As you can see, we're also breaking down under the volume weighted average price, which is another really good sign in attacking the downward direction. You know, the volume weighted average price is a trend identifier, and so when we break down underneath it, that's the market telling us we are now in a downward trend with more downward pressure. Waiting for a new candle to open up is one of my favorite ways of attacking this, because that first candle might have a lot of emotion kind of going back and up and down, but waiting for a really big bounce back up after a really solid move on the downside and then just taking profit very quickly into it, as you can see here, is just a really powerful way to trade that does make money in the markets if you can time it correctly. After we've broken down underneath the volume weighted average price, I love using that as a resistance level, as you can see here. You know, a lot of the time we're going to break underneath the volume weighted average price, bounce back up to test it, and then get rejected and continue back on that downward trend. This is something that happens all the time in the markets, and this is a strategy that I've been capitalizing on. Plus, if you're patient and wait for it, then you can really have a really high percentage setup to take advantage of. If we do break over the volume weighted average price for even a small amount of time and then immediately get rejected, that's one of my favorite signs, because I think it just shows a ton of weakness in the market. And so you can see here, we broke over the VWAP, rejected back underneath it, and then I thought that was really nice confirmation to attack another short trade and try to ride the breakdown. Because again, for us to move over that level and then completely get rejected there and move all the way back down is just a really weak sign, and you can see I capitalized on it very quickly, looking for that downward momentum. All right team, so that is this past week in the futures market. Hopefully we can scale up our size this next week, and if you have any suggestions for me, leave them in the comments below. If you want to check out Topstep, they are a funded account program in futures. They're the most legitimate funded account program in the world, and there's no PDT in futures. I'll include that link in the description. And always remember, you can watch us day trade, swing trade, and invest every single weekday morning right here on YouTube. And so with all that said and out the way, hit the subscribe button, hit the notification bell, and we'll see you all next time. Thanks for watching, team.